from some earlier videos that I put out here on the channel. But it's a rehash for a very good reason, because I think it is the #1 reason why many that come into the markets for the first time end up as donators to the market. And that's because they don't do this correctly, if at all. Yes, it's backtesting again. So today I'm going to show you exactly how I think you should be backtesting using some of the popular trading platforms out there. I'll also talk about the pitfalls and why many are backtesting in the wrong way, leading to false and inaccurate data, which is why the data they see in the backtesting doesn't always match the data they see when their hard-earned money is on the line. So we'll talk about the pitfalls as well. But before you even consider backtesting, before you even start on that journey, of course, you need to have a trading strategy. Now, we put out some trading strategies here on the channel. You can use one of mine, you can use some others you may have found elsewhere, or you can, of course, develop your own, which maybe is the preferred approach. But you do need to have a strategy. Backtesting is important for two main reasons. First of all, so that you know your strategy's got an edge over time. But most importantly, is that you know how the strategy performs over time. You know all those metrics: consecutive wins, consecutive losses, drawdown, average win, average loss, and so forth, profit factor, expectancy, all these things we've covered in the past. But you've got to have a strategy, and it's got to be written down. Remember that video I put out there a while ago, the cycle of doom? Got over 2 million views at the moment. It's why many traders fail, because they keep changing, tweaking strategies. Get your strategy written down, put it on a checklist that you have to click off when the rules align. This should apply in your back testing as well. If you get it laminated, you're going to be less inclined to start changing things when you hit that losing streak, which will happen in back testing, it will happen in demo trading, and it will certainly happen in real life trading as well. So get the strategy written down with all the trading criteria. And when you sit down with your back testing program, make sure you stick to it. Set yourself some time, is it 3 days, 4 days, a week, to back test that strategy in full. And remember, keep the results of your back test. No point just clicking away saying, yeah, that's a winner, that's a loser, that's a winner, that's a loser. You've got to journal your back testing results. So then you can go back, look back, and see exactly how that strategy has performed. I'll show you an example of a journal again in a moment. So this week's video, we're going to talk about the 3 ways that I think you should be backtesting. Come on, let's have a look. Okay, so now let's look at then the 3 ways that I think you can backtest.